Hello everyone, welcome to PaperworkIntel, where we make filling out forms and applications easy for everyone. Raheem on the mic, and I'm your host. I feel like I just did my taxes not too long ago, and it's almost time to do them again. How time flies. If you took any courses in 2019, you will have received an email from the school requesting you update your profile with your social insurance number so they can send you the right documents to file your taxes. Apparently, it's now something required by Canada Revenue. Anyway, after receiving that email, I got curious. What other tax changes are taking effect in 2020? Usually, when there's a change, most of us cringe and prepare to have money taken away from us, and rightfully so. Sometimes the change can actually leave more money in your wallets. Is that the case this time? Well, let's find out. Some of these changes made sense to me right away. Others, I had no clue what they were talking about. I had to look it up. If you have expertise in any of this and would like to add to the conversation, your comments are most welcome. Diving right in, basic personal amount. This one applies to most of you watching. In simple terms, your basic personal amount is the part of your income or your earnings that you get to keep without paying any tax. In 2019, the dollar amount was $12,069. It has now been increased to $13,229 if your annual income is this amount or less, which applies to most people. Now that's an increase of $1,160, more tax-free money for you. So next we have the Home Buyers Plan. If you don't know what this plan is, it's a program that helps first-time home buyers build or buy a home to live in. What happens is they let you withdraw money from your registered retirement savings plan to use as a down payment towards a home. $25,000 used to be the max that you could take out. Then that amount went up to $35,000. Basically, you're borrowing money from yourself tax-free to pay back over an extended period of time. Now, it goes without saying, you have to qualify to use this stuff, okay? Something else I should mention is, if you have a spouse that also qualifies, each of you can now access $35,000 and boom, y'all got $70,000 to buy a home. Wicked. Now, what changed? If you're married or in a common law relationship and you guys already bought a home through the program, if your relationship goes kaput and one of you wants to use the program to buy another home, you can't. You no longer qualify as a first-time home buyer. This is what's changing. They've made exceptions for when there's a breakdown in a relationship, so that if you meet certain criteria, you can still use the program to buy a home. Next, we have annuities. This one I'm not familiar with, so I looked it up. From what I gather, it's something you buy from a life insurance company, usually intended for additional income when you retire. So, the idea is your buy-in money is used for investments that generate profits. Naturally, they keep the profits and pay you a little bit of the profits as interest, which I believe is also tax-free. That goes on month after month, year after year, till the time comes when they have to start paying you an annual income. I don't have annuities and know very little about them, but for those of you who do, it says here you can now buy 2 new types of annuities. If you know a lot about this subject matter and would like to enlighten us in the comment section, please and thank you. As a matter of fact, if you click on my profile and follow me here on LinkedIn, in addition to your comment, I'll be happy to buy you a cup of coffee. You have to be local though, because I don't want to mail this international. Moving on. Next we have journalism, personal income tax credit for digital subscriptions. The basic gist of it is, if you pay for access to digital products like news, you can claim up to $500 of your subscription fees. The max credit you will receive is $75, even if you claim $500. That tells me there's going to be some kind of worksheet where you have to plug in your numbers to calculate what your credit amount will be. I was hoping to find a list of qualified organizations and could not find one to share with you guys. But what I think is going to happen is eventually there'll be a list you can go through to find out if you qualify to receive the tax credit. If that list already exists and you know where to find it, you can share that info in the comments. Please and thank you. Next we have journalism qualified donee status. For those of you that donate money to news organizations, you are now able to get a tax credit for your donations. The organization has to meet some criteria. Being a not-for-profit is one. Next, we have contributions to a specified multi-employer plan for older members. This one's not easy to understand, at least not for me. I feel they could have done a better job in keeping it simple, stupid. But here's my takeaway. Usually, when you get to the age of 71, you would have stopped contributing to a pension plan. By then, you'll be on the receiving end, receiving benefits. Up until that age, your employer can keep matching your contributions to a pension plan, no problem. Here's where the issue is. If you're part of a union, the collective agreement may allow your employer to keep contributing to a pension plan even when you're past 71, which may be of no benefit to you, the employee. That's what they're trying to fix by implementing some new rules to put an end to those situations. Next is foreign affiliates reporting requirements. This one's pretty straightforward. In a nutshell, those of you that earn money from businesses that are not Canadian, i.e. non-resident corporations, the time frame to file your taxes is being tightened. You now have less time to file. And the last one on the list, multilateral convention to implement tax treaty related measures to prevent base erosion and profit sharing, also known as the multilateral instrument. Oh my God, they couldn't come up with anything shorter. If I didn't know any better, I would think an African is responsible for this name. Yes, so you know we love the English language and we use it to complicate everything. This is a treaty signed by several countries to work together to stop multinational tax avoidance. I'm sure you've heard stories of rich people or companies taking advantage of cracks in the system, like routing profits through countries where they'll be obligated to pay little to no tax, stuff like that. It's honorable that Canada wants an even playing field when it comes to taxes, but is it going to happen? The battle between the wealthy and the taxman has been going on for ages. One thing's for sure though, the wealthy didn't get wealthy and stay wealthy by giving away money. What do you guys think? Alrighty then. Now, besides an increase to the basic personal amount, the one that affects most people, what other change will you be affected by and how? I'm looking forward to reading your comments on the topic. That's it for now. Before you leave, let me thank you for your time. If there's a topic you'd like to see me cover on the channel, let me know in the comments or send me an email. If you find the content on this channel useful and would like to give me a high five, a fist pump, or simply treat me to a cup of coffee. Let's keep it real, folks. Without coffee, none of this. Oh, none of this would have been possible. There's a link in the description for that. Your support is always appreciated and will allow me dedicate more time to making these videos. Please like, comment, share the channel. Let's keep the conversation going. Until next time, friends, thank you. Deuces.